Okay, traders, today is Friday, January 4th, 2013. This is our first video of the new year, 2013. Thank you so much for showing up to today's live class. I think you will find this class interesting. Before we go forward, let me say this is the 964th video that I have presented to this crowd. I know these videos are absolutely helping some of you become better analysts, and I hope in turn that helps you to become a better trader. What we are looking at is a long-term view. We all know that futures trading is extremely risky and can cause substantial financial loss, right? Short-term or long-term, you can be beat up for playing this game. So you need to be aware of the risks behind trading commodities. You need to know a stop is your best friend. Certainly, commodities trading is not suitable for all trading accounts. And if you don't have money to lose, you should just get up and run, because everybody loses a little bit in this game until they learn what they're doing, if not a lot. So, you got to know what you're doing if you're going to take the advice in these videos, because it's real professional trading. It's not for the novice. Let's rock and roll. All right, traders. So as I said, this video is being filmed on Friday, January 4th. What you are looking at is the NASDAQ weekly bar, and for all intents and purposes, I want you to recognize that this is a long-term view. This is a longer-term view of what we expect to happen with our markets moving forward in 2013. I know we are short-term traders. The OMNI Trading Academy does lots of short-term trading calls, but this particular video is just for a longer-term view. We will look at short-term for Sunday night and decide what to do Sunday through Monday, but this is for what do you think the markets are pointing towards now throughout the year? What's the flavor look like for 2013? And I can say this. You are looking at the NASDAQ weekly bar chart, traders. This is 2009. 2009 happens right here. Since then, we have been just rallying steadily on a weekly bar chart, bouncing off major support, looking absolutely fantastic. Then it gets even more interesting, because if you take this and you go like this and create a parallel channel, look at how well we've behaved inside of this parallel channel. And we just bounced off the lows of that channel. Boom. So that tells you that we are now heading for what? Most likely the highs of the channel up here somewhere. That's probably what comes next, is a rally towards that level. Now, if you want to take something shorter term, resistance, and look at it like that, and say, well, we are in a sideways parallel channel inside of the major parallel channel. There is a secondary one. Well, that's okay, because we just bounced off of that too. So if that's an argument against the upside, you don't have one. We are going up at least till here, if not here, in the intermediate term, meaning over the next few weeks or this first quarter into the second quarter. That's what the NASDAQ shows us. Now, removing anything even slightly negative and looking at what NASDAQ has done, if it hits the bottom, it somehow makes its way to the top. Bottom, all the way to the top. Didn't hit the bottom, still went to the top. Hit the bottom, made its way to the top. Came down and hit the bottom. It's going to make its way to the top now. That's what the long-term view is looking at this NASDAQ bar chart. Let's go look at the ES for a moment. Look at the ES in a repetitive pattern. This is the E-mini S&P on a weekly bar chart, repetitive pattern. This is amazing, because down here, and I've shown this to you, I don't know, at least for the last 2 years, 3 years, 4 years. I've been showing this to you for quite some time now. Look at the V pattern bottom here. Rallies into a parallel channel, gets tired, comes into a V bottom. Rallies into a parallel channel, gets tired, comes into a V bottom. Rallies into a parallel channel, gets tired, comes into a V bottom. Parallel channel, albeit slightly smaller now than the ones before it. V bottom, parallel channel. Even if it's only going to be a small parallel channel, these are weekly bars. You got a long way to go before it's completed, telling you that the market wants to move up at least for a few weeks before we back off again. Now, more interesting, each time we put this V bottom in, guess what comes next? A new high. V bottom, new high. V bottom, new high. The V bottom comes in again, another new high. Another V bottom, another new high. We just had a V bottom. Can anyone guess what comes next? Come on. guess, traders. See, put your thinking caps on, you know, ask a psychic out there, see if you can come up with an answer on what we would expect next. A new high, right? I mean, how hard is this? Now, I'm not saying trading is easy. Following this repetitive pattern is kind of easy. So you should get a new high before this gets tired and backs off. Now, a new high can only, it only needs to go to 1475 to give you a new high. But I think you will get a new high. So that's what these charts are telling us. Now, let's continue. More long-term view, weekly bar chart. Let's look at the ES. Nice and clean now. Look at this chart. Just like the NASDAQ since 2009 down here, since 2009, you have been in a wonderful parallel channel. Then we put in an inverted head and shoulders, traders. We all know what they are. Left shoulder, the head, the right shoulder. So you have your inverted head and shoulders. That is a bullish formation. V bottom, no less, which is usually always what you get with an inverted head and shoulders. Now we are in this parallel channel. Minimum you go is up here. That's near my 1450, 1440 projection. Imagine that. That should absolutely happen. S&P should make new highs. As I told you today earlier, we would make new highs today and bull up, and Sunday and Monday continue on. It is happening now. I expect S&P to trade on this day alone as high as 1464. The next level is 1469. So it's moving up, but it's doing what it's supposed to do on the weekly and the daily. But this is long-term view on the weekly. If we manage to just hit the top of this, we come in at 1538. I'd like to see that happen in the emini S&P. We've had the inverted head and shoulders. It held. We are on our way up. So that would be your long-term view in the NASDAQ and the S&P on the weekly bar charts. Let's look around a little bit. Traders, you are looking at the Dow Jones Transportation Average Daily Bar Chart. If you don't recognize what you're looking at, the whole entire thing is a huge inverted head and shoulders with multiple head and shoulders sprinkled all throughout the bottoming pattern. This tells us we are going way higher as a market, way higher over time. I mean, extremely big formations like this give you very, very high projections if in fact they are correct. Now, are they correct? Well, the last inverted head and shoulders, once the bottom was put in, you have shoulder, head, shoulder, nice big rally. Now we have shoulder, head, shoulder, and it's starting to rally. The whole thing is one huge shoulder, head, and shoulder. That is a very bullish look. It's a very bullish formation. Over time, the transportation average is extremely bullish. Let's continue to look at other charts. Dow Jones Industrial Average Weekly Bar Chart. Look at this thing. Look at how well it held down here. I remember when I created this chart and called this a lovely hold. Since then, it's moved higher and higher, and now it's in this parallel channel. Very, very nice parallel channel because, look, it hits perfectly in many spots. This is a very nice parallel channel right here. So we are in a secondary parallel channel, the blue, inside of a major parallel channel, and it's really behaving well. It's very symmetrical inside of its movement here, inside this parallel channel. And you are looking at 13.9, 13.875 just to get out of this mess. So if it just rallies a little bit, you're looking for this thing to rally a lot, several hundred points before it stops. That's your Dow Jones Industrial Average. Let's go look at the Russell. Traders, look at this Russell chart. Wonderful parallel channel right here. Inverted bullish head and shoulders, rallies, makes another inverted head and shoulders, rallies, makes a third inverted head and shoulders. It is now rallying above its previous highs. You could not ask for more from a signal from the Russell on a long-term view. Remember, this is a slightly longer-term view, so we will have pullbacks. I'm not saying that you should sell the farm and take the proceeds and get long the markets. I am telling you that we are buying pullbacks, and we expect much higher. Today alone, 1464 to 1469 in S&P. And then, 1475 has been a target that's been on our radar for quite some time. That's just right now. I think we hit our 1540 target by next week after, but we'll see, one day at a time. So your Russell now, very, very nice looking chart. If you don't believe in these inverted head and shoulders patterns, you're not understanding how this market works. Here's another one right here. Inverted head and shoulders. Watch what happens next. Boom. This is the same market, right? We are looking at your Russell. Inverted head and shoulders. What comes next? Nice big rally. Boom, boom, boom. Here we are, inverted head and shoulders. Nice big rally. Inverted head and shoulders. Nice big rally. And another inverted head and shoulders. The rally's beginning. I don't think we need anyone to tell us where this is likely going next, and it's likely going up here. Moving over to Europe. Traders, here's a chart that I presented in a video last week, which depicted the up move to come before the fiscal cliff. And it sure did come our way in the U.S. and in the European markets. Now we're looking at the very same chart. I showed this to you when it was getting above the flag. I said big bull flag represented here in blue, and that we were getting above the major resistance right here, way back from the highs of 2007, then the crash low. Then we've been bouncing in between these lines, this, I guess it's ascending pennant, if you will. So here we are bouncing in between. We got above it in the form of a bull flag and are taking off. That is really good looking. That is really good looking breakout of resistance in your DAX, and now in a parallel channel, threatening to go much higher. Go DAX, go markets, go technical analysis. Wonderful, wonderful, wonderful thing we have here is that the charts will tell us what comes next if we pay attention to the charts. Now let's go look at the dollar index. Traders, the dollar index. It is in a head and shoulders formation, which is opposite of the stock market right now. The stock market has been in an inverted head and shoulders. We are now looking at an upright head and shoulders, which is more bearish than it is bullish. The formation is clear. Left shoulder, head, right shoulder. What should come next is a head test, a failure of that head test. What should happen is we have a head test. If it fails to get above that head test, we will then have our break. Now, how these head and shoulders work, they're not 100% sure if in fact that head test turns out to be something that doesn't fail at the head and just keeps going. Well, away we go to the upside, and the head and shoulders proves to not be real. But that's not the case right now. At this point, it is a head and shoulders. It's as valid as the day is long, and we respect the formation until it proves otherwise. So for now, bearish in the dollar based upon this formation. Certainly bullish in all the other markets we looked at. So what is my case for the stock market to continue to go higher? Of course, what I've already shown you in the past charts, but now let's go look at something else that's very interesting. The last break we had one of these. It went up, and it sort of held down here and took off. Here we have another one of these patterns now. Up, down, up. Will it hold right here? We don't think anything about bonds until it breaks this area. Once it breaks this area, then you know what I think this is? And, of course, you're going to laugh because you'll think I'm obsessed, but I'm not. The charts are what they are. I just read them. The whole thing, here's what's happening now. We're putting in a topping head and shoulders. Watch this. This is what's happening right now. We've got the shoulder and we've got the head, and we're coming down to put the right shoulder in. And once we put the right shoulder in, you will have your top in bonds. Because if the stock market continues on this pace and the real estate market continues on this pace, you will have your head and shoulders in bonds. Let me add a little time to this chart. This is what is probably coming next. We're going to come down into this shoulder, and we're going to start to herky-jerky in here a little bit, a little up, a little down, a little up, a little down. And if we fill in this shoulder, then I will be completely convinced that the top is in bonds, and we have a long way to go on the upside in your S&P. Speaking of the S&P, this is what we are in now. We have just made new highs today, and we are expecting to hit somewhere up here very shortly. Traders, thank you so much for coming to today's class. I hope this class helps to keep you in tune with the longer-term view and where these markets may go. Thank you so much. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.